Hello guys. Since I'm making some videos about investing and some related information, I will speak today about what we call averaging down. Now what does it mean? Averaging down, it means where the stock goes down, you buy more. This technique, some people use it, but the problem is that this technique is too bad. People, they don't understand the mechanic of the market. That's why if someone buys a stock, let's say at $50, just an example. Now, for example, as we do as a swing traders. Now, why we put stop loss? Stop loss, it means we calculate our risk and we say that if we get this loss, we should exit whatever happens in the market. We don't care what will happen later because we lose some money. Now, you bought at 50. The stock goes, let's say, at 48. Just an example. 200. So you have bought, let's say, 100 shares. The stock was 50. Now, today is 48. How much you lost? You lost $200. Now, you buy more of this stock. You think that when you buy, and if the stock goes up, you will make money. Now, let's say after a few days, the stock goes to 45. Now, the 100 shares that you bought before, you lost $500. Okay? From 50 to 45. Now you bought 100 shares more at 48. You lost $300. So what is your loss? $800. And if the stock is going down, you will lose. You will buy more and you will lose more. You will buy more. Have you seen a stock like Twitter? I told you before, I had made videos when it was going up. I bought it heavily. It goes from $35, it goes to $74. I think 74, 73 cents. This is the highest. Okay? Why I buy at that time? Because the stock was going up. I buy more, I make more money. But when the stock is against you, like what did happen to Twitter, for those, let's say, who bought at 74, then they bought at 70, then they bought at 65, at 60, at 50, at 30. Now it is 18. How much you lost? You lost almost all your money. Okay? That's why those people, they don't understand what we call risk. Risk, either in trading or investment or in investing for the long run, okay, it's the same. It means you should calculate your risk. It's not by how much time you stay, it's how much you risk. And this is very, very important for those people who don't know how to trade or how to invest in stocks, and they do the same mistake. Now you tell me, what's the solution? What we should do? Okay, if you want to making a pyramid build up, is you buy a stock, the more it goes up, the more you buy. There are some techniques that we can use, okay, in order to buy on time. As I told you before, when you buy, you should buy on time, and this is called, in trading, it is called momentum. Momentum in trading or investing, it has the same principle. It means you buy when the stock is strong and it's going up. Okay? If I'm losing money from one stock, how can I buy more? It means I double my loss or I triple my loss. And if the stock, like let's say like Twitter, it was 74, now it is 18. Do you think that this 18 will go to 74? It can be, yes. But what if not? How much money you lose? How much money you stay? It can take 1 year, it can take 5 years, it can take 20 years. Okay? It can collapse. A company can collapse at any time. It doesn't collapse in 1 day, but it can collapse in 1 year or 2 or 3, and then it does bankruptcy. Okay? So understand these things that I am speaking about. There are some techniques that you do that are wrong, and maybe you have heard or you have read in books. Okay? And you think they are smart, but in real, they don't work. Because who tells you that the stock will go up? Tell me. You don't see a signal. The stock is going down. How can you tell it will go up? Okay? So predictions that the people do, and some old techniques that the people do, they ruin their trading and their investment, and they wipe out their account, and or they hold for a loser for all their life. I know a lot of people, okay, who bought a stock at a price, let's say $50. Now it is 20, and they ask me, oh Kareem, I bought the stock at 50, and after 1 year now it's 20. What should I do? Okay, I say, what is your exit plan before you buy the stock? When you want to exit, when you have a loss? Oh, I say, exit plan? I don't know. What is the exit plan? Okay. Now, if you don't know what is an exit plan, if you don't plan your trade, if you don't know what you are doing, okay, it's like when you go to a river, like in Amazon, and there are crocodiles, and you swim there, okay, pretending that you don't know that there are crocodiles there, or other fish eating flesh. Okay, so ignorance will never solve problems. We never solve. That's why my channel is to make you aware of these mistakes and to stop them. If you have lost a lot, okay, not all the people succeed. So when you change your mind, your results will change because you change your ideas. If you have the same old ideas, you will never make the money, and this is for sure. And that's why I sometimes say to you sure things, and sometimes I say not sure things. So understand the difference. Because if you do mistakes, you don't correct them, you know what you are going to have at the end. Because you are doing the same mistakes, how can you make money? So averaging down, this is just something that I explained. If you have more questions about this, please comment on this section, on the video section, or if you have a private question, please, you find here the email and my training website. You can just send me an email and we can discuss that. For me, I am not giving you advice on my channel. I'm just giving you opinions, how things work in the stock market. What works, what doesn't work. Okay? So, because at the end, if you lose little money, this is acceptable. Okay? Acceptable because no one knows the future. So when you buy a stock, there is no need to tell me that I am sure that the stock will go up. Okay? There is no need because it doesn't exist. Okay? So there is a possibility that you lose some trades or few trades. So this is normal in the market. But big losses are not normal. You let the stock goes to that price and you didn't plan to exit, and this is your problem, not the market problem. Because the market is doing what it is doing, no problem with that. So you should try to understand these things that happen in the market. Now you ask me the question, what is the good thing? Is to do a pyramid. When the stock is going up and it's going more and more and more, you can buy more and more and more, and you see if things goes wrong, you can sell everything and you can make a high profit. Even if you buy at the end and the stock doesn't go up and goes down, and you see that there is no way that the stock will go up, you can sell everything and you can make money. Because at first you make money from the market, but see, at first you lose money. How can you buy more from a loser? Okay, it's like you bet on a boxer, or you bet on a mixed martial arts who is a loser, who just get knocked out. Okay, and then you bet on him next match to be winner. Okay, most of the time not. So this is just an analogy, but I don't know if it's good or not. So as I told you before, if you have more questions, comment. If you have private questions, just send me a private question. Thank you very much and have a nice day.